investment world, I worked in the financial institutions for 25 years, mainly on the investment vehicles and audit and control side. And then I moved to Switzerland 3 years ago, and I started my company. So I'm a business owner, purely 95%, I would say, on the ESG sustainability and impact investing. And as my volunteering, I'm a part of the board of Swiss Impact Investment Association. So we just give a bit of information about who we are on the and what we are, what is our goal and mission is. And our mission is to generate impact investment awareness within the Swiss financial industry and beyond Switzerland, because we consider ourselves as a global association, as a thought leader. So we believe that impact investing is the prime driver for societal change and in reaching the global sustainable development goals defined by the United Nations. And SIIA is where financial professionals, policymakers, investors, impact businesses, non-profits, students, and academic representatives come together to shape our future of our society. Our goal, as a summary, is to create a safe place, a community where stakeholders. Can you hear me? You can hear me, right?
Yeah, we can hear you perfectly. Yeah.
Our goal is to create a safe place, a community where all stakeholders come together within the global impact ecosystem. They meet to learn, to discuss, to brainstorm, to create value, and launch entrepreneurial and innovative solutions to social and environmental issues. In addition to providing training and awareness within our community, we connect the entrepreneurs and business owners with investors in a friendly environment through our annual impact summits, as well as some other events that we do on a quarterly basis or on a weekly basis. We continue to seek impact entrepreneurs and partners to our community. And we are at the moment working on the 2021 agenda, where we will create more interviews and impact summits on a quarterly basis with the two objectives is one, to create the community and to discuss and to connect more. And the second one, to have a high level value discussions, value creation, thought leaders, impact, quarterly impact events going forward. And one of the objectives we have this year is also to be visible on the French side of Switzerland, and then to create a community, a bridge between Zurich, Zug, and Geneva and Lausanne as well. So this is one of the reasons I'm here to present SIIA and what we can achieve together, because we go to a lot of events. There are a lot of events about ESG, sustainability, impact, and all over the world. But there is a lot of talking, a lot of discussion, and as SIIA and our partners, what we wanted to do is actually create the action on those discussions to move to be one step further and to really make a difference and to tackle the issues that we are having at the moment with on the climate change and all the areas, as you know. So I wanted to give a short summary. So if you have any questions, please let me know. I'm here until the end of the event, and I'm happy to answer any questions you have.
Okay. Thank you very much, Denise. Can you hear me now? It's better?
I think it's better.
Okay, let's try. Okay, so on behalf of all people, we'd like to welcome you all to this first event of the Impact Investor Circle series, improving access to capital for SMEs in Africa in general, and a specific focus on SIIA, which, as you know, aspires to become a regional hub for impact investing. And we have a lot of ground to cover now, and we'd like to thank all those who are supporting this event with your attendance, and we hope for active participation. Basically, the approach, the format of this event is a mixture of a short workshop during the first part, and it will be followed by a more traditional each, after which investors and other participants are invited to ask clarifying, let's say, pre-releasing questions. So during the first part, we have Mr. Trevor Hambai, Senior Managing Partner DFA, to present and discuss some of the major issues which DFA is pushing on the topic of SME finance in Zambia, and what DFA sees as challenges and opportunities in this space. The second part will then showcase an investment-ready solution that tries to address these binding SME finance constraints. Yes, so basically 4P Group, our mission is basically an international group of change makers working towards quickly becoming a leading financial advisory company for people first PPP and sustainable impact investing, as well as a market reference for Africa focus and global outreach. We aim to bridge the gap between finance and development by carving out a third space for global and social environmental solutions to deliver performance purpose across all types of investments. And also we are in the process of setting up an impact infrastructure fund, and which was actually covered for the first time in the so-called Private Asset Impact Fund report that was recently published. For 4P Group, we are part of the Geneva Sustainable Finance Ecosystem, a service provider and soon an asset manager. We are also signatory for the Swiss Development Fund Declaration. And our service is basically trying to help our clients to think about the framework for assessing impact at two levels. We need to understand the asset manager and understand what commitment is on an ongoing basis to impact investing, and we also need to understand if they can measure and report on that impact, to understand whether they are integrating ESG at a high level. The other aspect of the framework is going to be a little more deeper into the asset management portfolio. So basically, if you look at the latest report from the Global Impact Investing Network, that covers almost 300 impact investors around the world, 46 countries, 77% of those impact investors are headquarters in developed countries, and the rest are headquarters in emerging markets. There's 43% of the respondents that are investing in emerging markets, and 61% of organizations in the sample are impact investors, and the remainder are more agnostic when it comes to impact investing. Also, in the beginning of 2019, the GIN estimates that there's almost $500 billion impact asset management controlled by more than 1,340 impact investors and DFIs globally. 14% of these, that is around $70 billion are allocated to Sub-Saharan Africa, with investors originating from all over the world. There's 135 impact investors and DFIs that are investing in Sub-Saharan Africa, and impact investors amount to 22 billion active funds and assets under management. If you see here from this chart, you can see that Sub-Saharan Africa has seen a lot of growth in the last 5 years. On the other hand, what's more positive is that a large share of the impact investors actually do intend to increase their investment going to Sub-Saharan Africa. Also, if you look at the global market share, what is the role of Swiss fund managers? There was $9.3 billion invested in impact investing themes by Swiss specialized impact investing fund managers, playing a leading role in the global impact investing space, as they manage or advise 1/3 of global for-profit fund managers captured in emerging markets. Also, in terms of impact assets under management by Swiss fund managers has quadrupled since 2010, registering a compound annual growth rate of 18.5%. Also, if you look at, again, the assets under management by type of organization, you find that 8% of the volume management stems from Western, Northern, and Southern Europe, including Switzerland. So why another impact investor event in Geneva? First of all, 4IP Group and Impactpreneurs Africa Limited are committed to building a vibrant and high-impact community across Africa through our involvement in a global steering group for impact investing and its 5 national advisory boards in South Africa, Kenya, Ghana, Nigeria, and Zambia. And FOI Group is aligned with the thriving network in Switzerland through our membership of Swiss Impact Investing Association. Impactpreneurs Africa Limited is aligned with the Impact Investing Ecosystem Zambia through the membership of the National Advisory Board of Zambia. And 4IP initially, for partnership with Impact Investing Exchange Global in Singapore, has decided to begin organizing a private investor circle series with asset managers interested in investing in impact. 4IP Group supports them with expert advice on impact investment fees, for example, our ESG tools for family offices, and 4IP Group and each showcasing investment opportunities through our partnership with Zambian Intermediary accelerators, including development for associates. So the next steps are starting, as we're doing today, the so-called Impact Investor Circle in Geneva. And second step is to showcase investment matchmaking platform to our impact investor networks in Geneva and beyond. So the Impact Investor Circle also aims to contribute to better understanding of social investment ecosystem in Africa so that Swiss investors, philanthropists, policymakers can use their capital and influence to create a greatest impact possible in Africa. So with these words, I'll hand over to Trevor to start his presentation. So let me give you, Trevor, the host.
Thank you, Christian. Let me just get a presentation up. Can you see my screen?
Not yet.
Is it up yet?
Yes, perfect. We can see it.
You can see it now? Okay. Thank you very much. You can see the screen, right?
Right.
Okay. So thank you very much, Christian. My name is Trevor Hambai, and I am the senior partner with Development Finance Associates, which is an intermediary based in Zambia. What I'd like to do very, very quickly is to give you a quick rundown in terms of what the investment profile and the risk that is associated with having to invest on the African continent. But the presentation is more inclined towards Zambia, but I think the issues that are first with Zambia come across the continent as a whole, but their specifics that come with individual countries. I'll have six slides to run through. They are very, very quick ones. And the first one will speak to the economic linkage between the SMEs and the economy. And then we'll look at the challenges, what the challenges are and the opportunities in terms of having to invest in the SME sector. Then we'll look at the investment risk profile, as well as why would you be investing on the African continent. And the fifth one will be strategic positioning. And then there are two reading references that I have highlighted that speak to some of the things that I'll be presenting. So the first aspect basically speaks to the linkage between SME and the economy. And one of the things that you do find, which also really is representative in most of the emerging economies, is that the emerging economies have driven the economic development in their countries through the SME sector. And the key aspect that speaks to this is because the SMEs usually represent the biggest proportion of the private sector in any economy. They are also very well positioned to be able to speak to supporting the grassroots. So the small businesses, when consolidated, will speak to the largest component of that economy. But the key aspect that also speaks to impact and sustainable development is the fact that it is impossible to lift a large number of people out of poverty without sustained economic growth. And it is impossible to have sustained economic growth without a vibrant private sector. And that is why the SMEs are so important. This I have highlighted in this graphic. If you look at Zambia, basically, one of the biggest challenges that we have is an issue of poverty. And 56% of the population lives below the poverty line. But it constitutes a very big portion of the economic sector of the country. And you do find that the SMEs in the country only contribute 32% to the national GDP, while they represent more than 96% of the private sector. So there's obviously a discourse between the two in terms of the size and their contribution to the GDP. And that is the gap that is created in terms of an investment opportunity. The key risk, which represents the risk profile, I have split this into two. First is the risk A is basically what is your investment risk. And then I'll speak to risk B, which is your business risk. So from the external position as an investor that is looking to be able to invest into this emerging market, the biggest risk that you have is the currency risk. Zambia's position has been very unique in the last few years. Generally speaking, prior to this period, currency risk was around 10 to 11% on an annual basis. Currency would depreciate. One second, we've got background noise somewhere. Please mute your mic. So the currency risk in terms of depreciation was around 10 to 11% on an annual basis. But in the last 3 or 4 years, what we do find is that we've had very high currency risk because of the deteriorating debt position of the country. And in the last year alone, 2020, we've had a depreciation of about 43%. And that is the biggest risk to any investment portfolio that comes into the country, especially if it's denominated in hard currency. The second one speaks to political risk. This hasn't been a major issue for Zambia, but in the last year, we also had issues of a couple of multinationals that were nationalized due to disputes that they had between government and the organizations. But these were focused mainly towards the mining sector. And it was a dispute about issues around tax repayments and refunds. So this has been a general issue around political risk. The last one that speaks to investor risk is speaking to ticket size, is that there's a very misalignment between investment capacity that they are looking to invest at ticket size probably above $1 million, while the local ticket size in terms of the SMEs that require the financing, that ticket size is usually below $20,000. That has created a misalignment in terms of having to find partnerships between investors and local enterprises. The second aspect, which speaks to the risk, business risk, which is basically inland, is speaking firstly on access to finance. That for most enterprises, there's very little access to finance. For Zambia, generally speaking, the access to finance is below 8%. The regional average is around 21%. But this applies to entities that are between 3 and 5 years. If it is below 3 years, which is basically a startup to 3 years, that access to finance is below 1%. These entities themselves also carry a challenge in terms of management skills. They lack all the skills in terms of finance and business to run the enterprise because they are small businesses. I'm trying to find who's got the background noise. Just 1 second, let me see.
There is a background noise. Can it be muted?
Okay.
Yes. Go.
Okay, can you hear me now?
Yes, that's perfect. Yeah.
Okay. So in terms of the second portion of the risk is after the investment, then we're looking at the business risk. And the business risk, like I mentioned, the two factors that firstly come with access to finance for the local enterprises. The second one is speaking to management skills, which they do not have all the management skills to run both the operations and manage the finances. The third one is ticket size again, is that the ticket size for the SMEs is so small, it is very difficult to be able to align this to potential investors. And the fourth one is speaking to market access, that their SMEs and in terms of their capacity to be able to meet the market quantum in terms of access is very limited because they need to be able to have consistent and large quantity supply. So one of the factors that speaks to this is having to consolidate them. And then the fifth one is debt market, is that as a country, most of them have had a challenge in the fact that the off-takers are asking for credit facilities, usually between 30 and 90 days before they make the payment. And this has put a constraint on the SMEs that they actually end up having to have a cash flow challenge. So that speaks to the risk profile between the two. And really what we're trying to show is that we are trying to create a platform that mitigates these factors that we've raised as the risk. The next one is speaking to the Africa investment potential. What potential does the region as an emerging market present? So one of the first things that you see regarding the African continent is that the potential lies in how much abundance of natural resources that it has. 30% of all the global natural resources are actually on the African continent, whether you're talking about oil, or you're talking about gas, or you're talking about precious minerals. They are all based on the African continent. But the positive aspects that speak to this is also the growth potential that the African continent possesses. 6 of the 10 largest, fastest growing economies in the world are also based on the African continent. And there's very great potential in terms of being able to cluster these small businesses while investing relatively small amounts for them to be able to be scalable. The second aspect is the market size of the African continent. Currently, the continent has a population size of just slightly over 1 billion, but it's projected that in the next 10 years, by 2030, that population size will be 1.7 billion. 1.7 billion is just about as good as the Chinese market is right now. And the second is that the African continent also has one of the most youthful population on the globe. 60% of its entire population are youth below 25. So this is very positive in terms of growth. But the last one, which speaks to returns, is that there's a very high return on investment that is invested on the African continent. Right now, if you're looking at Zambia as a country, our treasury bills will basically, which is the prime rate, give a return 29%.
As early in 75, they receive the 20% money upfront, and then we have the STLC of 59, and then even Bari is issuing, which also signifies that how Bari is going to give comfort to.
Sorry,
SIIA.
we've got a. Okay. Okay, so I was speaking that the return is around 29% for the prime rate, and that basically signifies how high the return is on the African continent. The last one, then the next one is basically speaking to why would you be investing into the emerging market, especially on the African continent. The key consideration that you have is right now, with the COVID pandemic, what we are seeing is a global recession potentially. And what will happen is what we are foreseeing a general rebound of all the economies across the globe. And what will happen with that rebound is that anybody who is investing.
Households are going to be served 730K tons of CO2 offset. There have been slight delays initially when the COVID hit, but what we learned is there are not much delays in the overall project.
Okay. So I'm saying the global rebound in terms of economic growth is going to happen right across the globe. And what you might see is actually the beginning of the fourth industrial revolution. But in having to have that rebound in global economies is that you must be strategically positioned to be able to take advantage when this rebound takes off. And that is why it is important to invest now while the market is at the bottom. The last is the reading references that I have put that speak to most of the things that I have mentioned in the presentation. And the first one is actually an article that I did in February 2019, and this was published on Next Billion. It is an online publication in the United States. And the article was Why the Future is Africa and Why SMEs Should Lead the Way. I have put a link. The second one was done by a local partner here who is Sven Hafner. He is a CEO for another equity investing firm in Zambia called 3030 Capital. And this was a publication on LinkedIn just 2 months ago in October 2020. And it is saying, what does Zambia's debt crisis mean for investment? So that covers the quick rundown of the risk profile as it is for Zambia at the moment. Thank you very much. Back to you, Christian.
Thank you very much, Trevor, for this very insightful presentation of some of the key, let's say, the context and the key constraints and that the impact investor is going to be confronted with if he decides to invest in social enterprises or impact enterprises in Zambia. So this is an opportunity for the audience to ask a few questions before we actually go to the e-pitch. So are there any questions among participants? Please raise your hand or just if you just intervene, and please start by introducing yourself, your name and your affiliation, and then raise the question, preferably a short question. Thank you. Any questions? Okay, maybe while people are thinking, so
Can I
let me
ask
just...
a question? Sorry.
Yes, please go
Sorry,
ahead.
I'm late. Yes.
Yeah.
Thank you very much for this presentation. My name is Marlies Batterink. I'm with Aqua for All. We are targeting SDG 6 specifically, WASH. I was wondering if you see any specific variations across sectors when it comes to opportunities and in investments in SMEs.
So from the Zambian perspective, I do not see a lot of variation in terms of the sectors. What is absolute is the fact that it is very important that the sectors, the SMEs are actually clustered to be able to be supported in terms of the technical assistance that they need, because the challenges that they face across the sectors are generally the same. And in terms of having to improve their business capacity to develop, they require business development services, which is technical assistance, and that applies across all the sectors. So it is unlikely that there will be any variations between the sectors. But there are obviously specific sectors that present greater potential than the others. Does that answer your question?
Yes, it does, sort of. I would be very interested to learn more about this clustering, but I believe there will be a presentation, right, on this platform. So I'm very interested to learn more. Thank you.
Okay, we will touch on the issue of clustering in the next presentation, yes. Yeah,
any other questions? Maybe while people are thinking, let me just reiterate what Travis already said. So basically, the challenge that you find in Zambia is that there's an increasing number of companies looking at solving both societal and environmental challenges, but most of them are not investment ready. There's also lack of local impact investors as well as intermediaries. Development Finance Associates is amongst one of the few intermediaries that actually exists in Zambia, which was just reiterated by the Africa Venture Philanthropic Association in their recent report on social investment in Africa. So that creates high transaction costs and also leads to a preference for high investment amounts. And most importantly, it creates a mismatch between the demand and the capital being provided. Any other questions? If not, since there's already been an expression of interest in the platform that you have, Trevor, maybe we'll just jump straight into, also because we started a bit late. So if there's no other questions regarding, let's say, the context and the overall, let's say, setup within which this platform is placed, let's just move to the second part of today's event. Over to you, Trevor.
Thank you, Christian. Can you see my window again? Okay.
Yes.
So again, we as an intermediary are basically looking at ways to try and mitigate the risk that is associated with having to finance local enterprises, especially the ones that are aligned to be able to attract external investors. And this is a platform that is looking at having to do this. And it basically will address the challenges that I raised before, which was in the risk profile around ticket size, political risk, as well as the currency risk. And then we'll also touch on the business risk that comes in after the investment. And I have 8 very quick slides to run you through, which will basically cover the introduction, what the investment platform objective is, and what the platform is itself, the potential investment projects, and the scalability of this, and how it secures the investment, as well as the investment impact. And then the last one will be what the ask is. So the general, if you're looking at DFA, like I mentioned, we're an intermediary organization that is social in nature and non-profit, focused towards fund management. And we look at creating practical financing solutions for women, youth, and underserved SMEs. The general objective of the platform we're creating, is, we're referring to it as a guarantee impact investment financing model. And it's got 4 key objectives that it wants to achieve. First, it's an innovative investment platform, but it mitigates the currency risk and covers the issues that are speaking to the ticket size and the business risk. It is specifically focused towards supporting SMEs to create the impact investment. And the 3 key areas that we are looking at in terms of sector are speaking to green bioenergy, agricultural value chain, and export-based businesses. In terms of the principle of how we are running this, it is working on the principle of that the players that are associated with financing the SMEs are working towards collaboration. And in terms of the entities that we are supporting, who are the SMEs, is that they're all clustered into groups according to the sector. And the third one is speaking to consolidation, which is that you consolidate them for them to be able to access potential markets. The key issue also at the end of this in terms of the investment is that the investment funds are term locked into a deposit, which is a term deposit, which minimizes the risk of loss. So if there was any potential loss, it means that it is only limited to currency risk, but the funds themselves will be locked into a term deposit. So let me just highlight how that principle works. So the guarantee impact investment financing platform, basically, if you look at the column A, is where the funds come in. And these funds might come in the form of debt or equity.
Trevor, we don't see your presentation. We see the other one, the previous one. You can just upload the new presentation.
Okay. Does it come up now? Sorry, can you see the new presentation? Okay. Apologies about that. I thought you actually could see it. So that was the quick introduction, but I will go straight. So let me just run through the potential objectives of the platform, which is an innovative investment platform. And the key issues that it wants to do is to mitigate the currency risk, manage the ticket size, and reduce on the business risk. The second one is specifically focused towards SMEs to create economic impact. And the 4 key areas that we're looking at in terms of this investment platform is green energy, which is in biogas, agricultural value chain, and export-based businesses. The platform will obviously scale, and it will include other sectors as well. And the 3 areas in which we run this is collaboration between the financing partners, as well as clustering the SMEs that are being supported. And then we consolidate their access to market in terms of product abilities to access the market. The investment fund itself that is put into supporting this is locked into a term deposit. So it will be going into a AAA rated bank, and it's locked as a term deposit. So let me highlight how that platform works. Is that what you do see here is that if you look at the column number A is where the investment fund comes in, and it can either be debt or equity. It can also potentially be a blend of the two. And what we do is that it's locked into a AAA rated bank, and you have in return a certificate of deposit as your collateral. We go into column B. What happens is that we get an interest return from the term deposit, and we use the the interest return as the funds we invest into the businesses. And we can do this in terms of whether we are actually doing it as equity, which might go up to around 33%, or if it's just debt finance with a maximum return of 12.5%. The first thing that you see is that in the interest return, it's only limited to around 26%. But when you go to column number C, what we do in column number C is that we also leverage that financing, which is in the term deposit, by an additional 80%. So technically speaking, you end up with potentially having to finance projects up to around 106% of the term deposit. The difference is that the 80% that is leveraged is guaranteed by local partners in terms of supporting specific SME growth. The investments that are coming through here are all going towards export-based businesses, but the export-based businesses are all SMEs that are clustered. What then that creates is potentially an income stream in hard currency, and that eliminates the risk in currency risk. And that is what is going to come back as return to pay what is in the term deposit. Potentially, with this model, we're looking at having it to scale, and it's going to support 1,360 small business enterprises. So just a quick run, the investment projects that we're looking at, like I mentioned, an end-to-end agricultural value chain, which is basically one of the key social investments that we're looking at having to do, because it supports the poorest of the poor who are in the agriculture sector. But we are creating a sustainable model. The second one is that the agricultural value chain is also having to have stratified investment around biogas energy and organic fertilizer. So the same entity that we are supporting in the agricultural value chain is also going to be producing biogas and organic fertilizer, which then we can consolidate into a single entity to access the market. And the third one is the one that creates the SME export platform, which supports export-based SMEs, which is an end-to-end trade platform. And those are the basic areas that we're having to look at. So sorry, just one moment. In terms of scalability of the projects, is that what we're looking to do is to support over a period of 4 years, up to 450 small export-based businesses who are all on the same platform. And they are also being housed in 9 facilities. In total, this is looking to be able to probably look at an investment of $4 million over the 4 years, and with a potential return of $144 million being generated as total revenue. The second one is speaking to us creating 20 diversified agricultural value chains, and those ones will be supporting 800 small-scale producers with 20 value processors, and it will also have 240 small-scale retailers. This is potentially an investment of around $6 million over the 4 years, with a turnover of around $24 million annually. So what you do see, technically speaking, is that in the middle there, we'll bring in the resources and lock them into a financial institution. Then around this, we will take the returns that are coming from there. We will leverage it into the export market, export-based businesses. We'll leverage it to do bioenergy, gas, and organic fertilizer, as well as collateralize it for the SMEs to all be supported at the same time. But at the bottom of this, then we'll be looking at a local entity, which technically might be one of the DFIs, who is going to provide a credit guarantee for any funds that are actually going into the investment of the SMEs. So the investment impact that is likely to be created over a period of 4 years is around 6,000 jobs, and potentially produce 1.8 million cubic meters of green biogas and 800 metric tons of organic fertilizer, while supporting 1,360 businesses. Over that period, we're looking at them having to contribute $760 million to the national GDP, creating 84 million in tax revenue for government, with a net income potentially of $70 million. So initially, with the project, is that the ask is that we'll be looking at potential investment of around $4 million, which we can actually consider syndication with a maximum of 2 potential funders. Of this amount, we are also probably looking at somebody who's wanting to do social investment, that the initial investment for this project is around $0.9 million, just under $1 million. So what you do see is that $0.9 million is going to be created from the investment, from the term deposit that we do, which is around 26%. And that creates the initial investment that we're going to put in there. This instrument might be debt, it might be equity. We could do a blend of both debt and equity, or just basic social investments. The finance will support 128 SME right now as an immediate one, clustered businesses with a 4-year term. This has a guaranteed return of 12.5%, and potentially it will provide 2 coupon payments with the exception of the first year. And this is going to be secured with a certificate of deposit and a guarantee. So that basically covers a quick presentation of what
can
the
we ask
platform
questions?
is. Absolutely. Back to you, Christian.
Well, once again, thank you very much, Trevor, for presenting this financial innovation. To my knowledge, it's something very new. I have not seen anything like it before. So before, let's allow people to raise any questions that you have, and please present yourself and your affiliation, and make the question as short as possible, so as many people can ask questions as possible. Thank you very much.
Yes, so if I may, this is Asad Mahmood. I'm the CEO of SIIA Funds, which is based out of the US. A quick question. We'd love to get this PowerPoint. I'm sorry, I was a bit distracted. I had double booked, so I wasn't following through completely, but I'd love to see that. The question I had is, who is guaranteeing that return? And when do you need the money? Because this would be, it's interesting. It sounds very interesting to me.
So there are 2 sides of the guarantee. The first one is that the investment funds that come in to support this is locked into a term deposit, and this will be going into a triple-rated bank. And technically speaking, there are 3 triple-rated banks that we are speaking about in the country, which is your ABSA, which is formerly Barclays, and we've got Standard Chartered as well as FNB. So it is one of those ones in which that deposit is going to go to, and they're the ones that will provide that initial guarantee, which is a certificate of deposit. But the investment return that comes, which is the local interest rate, which is in column B at 26%, is the funds that are going to be used to invest into the SME businesses. And the investment that is put into the SME businesses will also be guaranteed by a local partner who is a DFI. At the moment, it might be ADB or DFI, or sorry, DFID, but it just depends on the quantum that we're looking at before we are able to lock in who is actually doing the second guarantee towards the businesses themselves.
Thanks. we would be interested in pursuing a separate meeting with you at your convenience in the coming weeks.
I'll be very much happy to oblige. I'm sure Christian will be able to accord the specific details on how you can reach me.
Sure, no problem. Great. Good to know there's interest in this very interesting platform. While we're waiting for other people to raise questions, let me just quickly, as you know, some of the most important criteria for impact investors are the management quality, investment targeting, let's say, minority stakes that will be highly dependent on the quality of the existing management, whereas also the issue of the potential to scale this business. You talked a little bit about that, Trevor. The financial sustainability. You're also talking about that you're going to go to other sectors, and then exit, the possibility to exit the investment. Could you speak maybe to some of those important screening investment criteria?
So in terms of the investment, those key factors which are around, firstly, speak to governance, is that once we start to speak in detail regarding anybody who's showing interest, is then we'll specifically speak to the investment team that we have that is working on this. But the key issue that you see here is that the third objective of this platform is that it creates collaboration between different players. So in terms of the investment, is that we have got around 6 or 7 different other entities for who we are working with in terms of implementing this. And we are providing a platform that ensures that we can manage the financing portion of this. So we'll be able to present to you the team that is basically working to be the financing team. We've also got a board of directors that overrides this, that is also part of the NABII. And those are the key issues that we really want to look at. Then we'll be looking at the issues about the entities that we are financing. But the other positive thing that we actually also offer is the fact that other than the equity, other than the debt, you can also do equity, which it might reduce the 12.5%, but you're also doing equity, and it gives you a platform for you to be able to come onto the investment team. Is there anything else I missed, Christian?
In terms of exit?
So in terms of exit, there are a couple of challenges on the African continent in terms of exit. So we could do this exit because the principle about exit is that we can take this investment onto the public platform and probably do an IPO for somebody to be able to exit, which has been very, very difficult with our current stock exchange. So the options are not very strong with regards to having to exit on the stock exchange, but we can look at all the other options that we can devise that speak to creating an exit strategy. And one of the ways that I see this being able to work is creating what you'd consider the top value at the point of exit, and then spread this income right across the period of the financing.
Okay. Any other questions?
The investment has to be both in debt or equity. Can it just be in debt?
It can just be in debt. We'll be happier if it's just in debt, but the option is always something that we have on the table.
Right. Great.
Okay, maybe I can just add, since unfortunately, as you know, we're doing a recording of this event, so we'll share the recording with impact investors here in Geneva. As you know, out of the 10 top fund managers in Switzerland, 6 of them has headquarters in Geneva, 2 of them are in Zurich, 1 in Bern and 1 in Zug. So in terms of asset under management, we have Blue Orchard, Responsibility and Symbiotics. They remain the top 3 leading Swiss fund managers. and they are managing and advising the bulk of impact investing assets in Switzerland, 86%. These three companies have a large track record in microfinance investment space, which has been their historical core area of focus. Over time, they have also developed new impact products, such as SME, agriculture, as you're looking at, Trevor, education, and energy and climate funds. Then you have Obvium, which is a Swiss DFI, Bamboo Capital Partners. They have their own specialities in terms of investor base and financial instruments. The first one was a spin-off of the Swiss Investment Fund of Emerging Markets, CFIM, that Obvium took management of in 2010. And the second one is a specialized seed and growth funding across several impact sectors, including fintech, energy, and healthcare. Then we also have PT Impact Investment. It's the only newcomer in the field in the last 9 years, and they're investing both debt and equity across a multitude of sectors. So they might also be an impact investor that you might want to approach, Trevor. And then you have Impact Finance Management SA, launched in 2010, and they are investing directly in small and medium agribusinesses. And then you have Inox Capital SA. They provide capital to commodity value chain. So again, that might be an impact investor worth reaching out to, Trevor, since you're looking at value chains as well. And Inox Capital, they have launched 4 funds since inception, and one of them is promoting as an impact investing fund. And then last but not least, you have Alpha Mundi, founded in 2007, which uses a gender lens approach to invest in diversified portfolio with the principal exposure to microfinance, agriculture, and energy, so they might also be interested. And then last but not least, you have SIIA, which is a cooperative that provide working capital to agricultural cooperatives. So these are some of the impact investors, some of the leading impact investors in Switzerland that we are hoping to participate in person, but unfortunately are not with us today, but we will share your presentation through the recording. Any other questions from the participants before we wind up? Okay. What I can say, maybe as a last thing, that is worth keeping in mind in terms of the outlook in Zambia, and also generally in terms of Switzerland, where the Swiss impact investors they stand. So, as you know, the Swiss impact funds, they have a very long track record in microfinance impact investing. They are managing almost 1/3 of all of the global funds that are investing in emerging market, as I mentioned before. And the Swiss fund managers, they constitute a major contributor to the SDGs. They channel their impact investing in emerging markets through financial intermediaries or directly in projects or corporations, such as DFA's platforms. Or they have launched a multitude of impact investing products targeting sectors such as microfinance, SME, energy, climate, food, agriculture, health, and energy. So I definitely think the platform that you're proposing, Trevor, very much is aligned with some of the sectoral and thematical targets of the leading impact investors in Switzerland and beyond, of course. Unless there's any other questions, then I would like to draw this meeting to a close by concluding that we are hoping that I think some of the issues that Trevor presented during the first part of the meeting, I think there are very valuable inputs to the so-called Global Steering Group for Impact Investing. They have a so-called SME Finance Action Plan. So some of the elements that was touched upon during this meeting, we will share that with that working group. Also, what we are trying to do is that the whole purpose of organizing this investor circle is that we want to create awareness about impact investing opportunities and some of the opportunities, as well as some of the constraints that you find in emerging market in Africa and in Zambia in particular. And so the purpose of this joint impact investor circle is really to create awareness and also make advocacy for financial innovative initiatives such as the one that Trevor Hambai has been presenting through the DFA platform to showcase this opportunity. And also we have chosen to focus on market building and enabling, and that's the reason why the first events in this series are looking at leading intermediaries, so-called accelerators, and business development service providers like DFA, which play a very important role to make African SMEs more investment ready and attractive for impact investors. So last but not least, just allow me to let you know that the next event will take place in December. It's going to be focusing on women empowerment through impact investing. We will be inviting another leading financial intermediary in Zambia called the Women Entrepreneurs Access Center, WIAC. And hopefully we also hope to have the Impact Investing Exchange Global from Singapore to be part of this, since giving their focus on women empowerment particularly through the Women Livelihood Bond. And then in January next year, after New Year's, we're going to be focusing on customer-centered professional services to SMEs and how to make agricultural markets work for Zambia. And to present those topics, we have Challenges Zambia, Musica Zambia, and hopefully also Prospero Zambia. So with these words, Denise, you want to just say a few words to conclude on behalf of Swiss Impact Investing Association, please?
Yes, of course. Just to let you know that we are also working to collaborate with a platform where investors and investments meet. So potentially I can talk about that maybe in the next one. The whole idea is really creating again that community where the projects like Trevor mentioned also gets interest of the investors in that platform. In addition to connecting investor investments, there is also the forum, discussions, the marketing, is really a commercial forum environment. It's not just meeting, investor investments and that's it. It's really creating community where people can do a lot of transactions and share information and yeah, is a really very efficient community. So this is what we are going to collaborate with. And maybe I can have a bit of time next time in December to present that platform as well. Going forward, that could be also used to attendees here to this investor circle.
Okay, thank you so much, Denise, and thank you so much, Trevor, for your very insightful and very promising investment opportunity. And I hope that those impact investors who are not with us today in person, so to speak, since it's a virtual event, we hope that they will take a look at the recording and then get in touch with you, and we're happy to facilitate any investor interest to DFA and you in particular, Trevor. So thank you again to everyone for your participation. We're sorry apologize for the technical issues we had at the beginning of the event. This is our first event in the series, so hopefully we can do better next time. I wish you all a nice evening and see you soon. Bye.
Thank you very much.
Thank you.
Bye-bye.
Thank you very much.
Trevor,
Bye.
well, yeah. Thank you very much.